So, there's no guarantees it goes to 12. I mean, heck, there's no guarantees it goes to 20. So, what I generally recommend at this stage, now that it's down from 69 to 29 or so, is that so wild movement in crypto markets, wild movement in stock markets. I mean, bonds, we know the bond market has been crazy with yields. But bottom line is, when you look at the crypto market, it did exactly what it should have done. And I know that sounds weird to people, but the charts really give us insights. They give us the probabilities to kind of decipher what the likely outcome is. And I remember last time we talked about this bigger down move from 69,000 to about 33,000, and then how you got in this sideways choppy kind of consolidation pattern in cryptocurrency. And that's, if you look in a textbook, that's a standard bearish, channel pattern, bear flag pattern. So what that tells you, and by the term bear, we know that more than likely it was going to break down. It did just that, and it came down sharply, basically tagging 25,000 on the charts. Now, one thing I will show you, which is just so cool, and this is just how cool the charts are, but if we go to another channel, and I love my channels, as you guys know, and we flip over to it, and if we just connect this high through right here to this high and this high, so
Yeah.
basically the last two highs, and if we just draw a parallel down, look at what you got here. Like, where did Bitcoin stop falling?
Yeah.
Right
Yeah.
here at the lower end. And look at that hit, and that hit. So it's amazing how these charts show us, but I actually ended up going long on Bitcoin right down here just for a trade. Again, it's not a long-term investment, but just for a trade based on the fact that we hit this lower end of the trend. So 20,000 is the high end of my target. And again, just to understand where that's coming from, it's coming from the 2017 high. I believe that we have to get back there. We have to retest it. The idea here is that we're going through this first time ever for cryptocurrency where, the Fed is hiking rates substantially. They're sucking money out of the system. We've never had a period since Bitcoin's inception where there
Right.
wasn't some sort of QE going on, right? Well, now they've sucked that out. They've taken that away. They're reducing their balance sheet and they're raising rates. So it implies that we should have a bigger correction than usual. The other thing that I'd love to show you guys is 20,000 is the high end of my target. The low end is actually down at 12,000. And the way I'm getting that 12,000 target, if I make this chart here zoom out properly, is basically, if you look at this move down from 69,000 to 33,000, that's basically a vertical drop of $33,000. And if you take this high here at 48 and drop that same 33,000 down, which is what's called a measured move in technical analysis, you get $12,000. And what's even more fascinating is that if you look at previous cycles like 2017, when it topped out until the end of the bear market, in 2013, Bitcoin corrected 80 to 85%. Well, guess where 80 to 85% is? It's right around 12,000. November of 2021, it's 12 to 18 months. So we're already over 6 months into that, which implies give or take around 12 months more until we reach the bottom. But I do think that what'll end up happening is it'll be when fear gets to that level. We know fear is very pervasive. It'll be a fast move down. And then my guess is you'll get a bounce off that lows, but it'll chop around after that for a while until the next bull market takes over. So, there's no guarantees it goes to 12. I mean, heck, there's no guarantees it goes to 20. So what I generally recommend at this stage, now that it's down from 69 to 29 or so, is that you start thinking about, okay, I missed selling at the highs. That's one thing, you can't undo that. Instead, think about, do you still believe in the long-term cryptocurrency story, the long-term Bitcoin story? And if you do, then what I would recommend is dollar cost averaging slowly. Nothing crazy, but every $3,000 or $5,000 down, have a standard amount that you've already set aside and say, okay, I'm willing to put a little bit more in to bring my
Ah,
overall average down.
okay.
And this way, you'll have that exposure. If it just goes to 21, doesn't even get to 20, you're exposed. If it goes lower, you get a lower average. I think that's the
Okay.
play
So,
at this stage for most. I suggest is every month re-asking yourself, is the thesis still valid? And as long as it is, then I think overall, and I do believe in Bitcoin longer term, I think that you will be rewarded if you hold and you hold through this pain. But I think it's also important to understand is that in 2017, when we were at the lows, people were talking about Bitcoin not surviving. And you have to be ready to weather that emotional kind of nature that's going to be very, very inbred in a lot of people. You're going to see people writing crazy things on social media, and you have to really be able to block that out and stick with your thesis unless it changes. I do believe long term it is the digital gold. I truly do, and that's when I will accumulate a large position when it gets low enough for me. But I think it's also important to recognize that Bitcoin's been around since 2009. It's only a 13-year-old. The gold market has been around for thousands and thousands of years. It's very mature. You don't see big moves in gold, maybe 1% here and there. It's a very mature market. So eventually you will see Bitcoin mature into a much more stable market. But right now it's still being bought and sold by people panicking and being greedy and all this craziness. And it's still a very young asset. I'm in the camp that all we can do is look at past cycles. Now, again, it's important to understand that this is not necessarily like a past cycle in Bitcoin or a bear winter or a crypto winter, because we have the Fed doing what they're doing. But in general, 12 to 18 months from the highs. So I would again say generally another 12 months. The only kind of caveat here is, and this is my one worry, is that if you look at Amazon in the .com bubble or the NASDAQ after the 2000 collapse, it actually took 15 years for the NASDAQ to take out the .com bubble highs. I really hope that doesn't happen, because that's a really long time. But as a technician, it's important to look at all angles, even the ones you don't like or you don't believe in, just because you have to be informed. You have to know all this stuff. It has to all go into your algorithm in your brain about your decision making. You do need governments to come in and have some sort of regulation to prevent things like this happening again. And I think that could be a long-term positive. Maybe something like this needed to happen to get that regulation going. And I know a lot of people in the crypto markets are like, oh, I don't want any regulation. But you have to. If you ever want it to be a dominant force in assets, right, crypto needs forms of regulation. For instance, like one of the biggest things to me personally as an investor is that in an investment account where I trade stocks, I'm FDIC insured. In a bank account, I'm FDIC insured. You don't have that in crypto accounts. So if someone hacks in or makes you click a link that they steal your money, it's gone. And that is very disconcerting for people like me, that I want to put a lot of money in. But I mean, God forbid I click a link by accident and someone just takes my money and runs. So you do need the right steps to be taken here. And when that happens, I'm hopeful that that's a positive. Yeah, I mean, the Terra Luna collapse was insane. To see one of the top cryptocurrencies go to now hundredths of a penny. But again, understand what they do. And this is actually an important point, because a lot of investors are like, oh, let me buy it down here. I mean, people were buying it at 10 cents thinking, oh, this is a great, it's going to have a snapback. But please understand, they're doing the same thing as they do with stocks, where they dilute, they issue shares to try to shore up the UST, the stable coin. And so basically, I think you went from like 300 coins of Terra Luna to like billions and billions and billions. And so it's very hard for a stable, or for Terra Luna to actually bounce back significantly when they're just printing more and more of it. It's going to be a healthy thing to happen, but you have to see 90 to 95% of all cryptos wiped out. I mean, think about the .coms, think about what went on there. So many crappy .com companies got crazy valuations. Eventually, they kind of went away, and then the best of breed, the Amazons, the Googles, the ones we always talk about that are the biggest companies in the world, they're the ones that survived, and then they thrived because there was less out there for investors to go into. And I think that's very key for cryptocurrency. It's almost like a rite of passage for any asset. It has to go through this wipeout, and then the best kind of come out of it stable. I have some trend lines here. Basically, I bought off of this lower range right down here based on major support. This upper line is resistance. You can see we just kind of kissed it and pulled back a little bit. I do think Ethereum has more upside, likely back to about 2,500 in the near term over the next week or two. But again, I'm in a position where I'm looking at a bigger breakdown on the chart, and this is very, very problematic. And let me draw this trend line in for you guys. This trend line was such a good trend line until it broke. So see how for basically going back to early 2021, you kept on hammering and hammering and hammering, and then it broke. And once a trend line like this breaks, it's very hard for it to get back above this range. And ultimately, it may have bounces, but then the next leg lower comes in. So unfortunately, I think, at a very bare minimum, just like Bitcoin going back to the 2017 highs, I'm in the camp that you're likely headed back to about 1,400 at minimum on Ethereum. Definitely, if you can buy an ETF that is is on spot, so it doesn't have the flip overs of the future contracts and have losing value and stuff like that, then you can actually buy these cryptos in a way in your investment accounts and have that FDIC insurance and have that security and be tracking Bitcoin one for one. So I think, again, you know, if you're in this crazy period where the stock market's still collapsing another 20-30%, if crypto's still going down, I mean, yeah, you might get a short-term bounce, but that fear is still going to be there. But if you can get through that period, then that is the next stage towards upside. Gold is doing great, and number one, it's outperforming this year. I mean, think about what the NASDAQ is down this year, Bitcoin is down, and then gold, it may not be up a ton this year, it's up very, very slight amount, but it is certainly positive for the year, and that's even after a pretty dramatic pullback here recently. Right. Gold's actually held up beautifully, in fact, hitting that 2020 double top. So even in spite of that, gold is actually performing very, very well. And what you've seen here is gold broke out. So I think last time we talked about this breakout. And then I think I even said it was likely going to retrace to what I call the scene of the crime, which is the breakout trend line. And look at this, just in the last couple days, gold has done just that. So I've actually added to my gold positions just in the last 24 hours on this premise that this is a very kind of normal retrace before the next move up. And I love kind of explaining it in terms everyone understands. So think about a child, right? A child's at home with their parents. It's kind of, it wants to go out on its own. It wants to go out on its own here. It doesn't do it. Finally, it starts to make more headway, right? It's like, I really need to go out on my own. I'm getting older. It finally goes to college, but what do we know about kids that go to college? I did this. I'm always coming back for Christmas and the holidays, right? So it comes back for Christmas and the holidays, and then it goes out. Eventually, it gets its own place, you know, and it starts living on its own. So you can see Bitcoin underperforming, I mean, quite immensely.